Welcome to Mango Monkey Learns Money. I hope everyone is having a lovely holiday. I hope you are all doing well, enjoying the weather, and looking forward to 2021. In today's video, I will give you 4 reasons why property prices keep going up in Australia. The first reason is that now there is too much money lying around. At the start of this year, the Australian government gave a lot of money to people. So if you have superannuation, and most people do have superannuation, you can get $10,000 before June this year and another $10,000 after June. So each person can get $20,000. And if you have a partner, a wife or husband, each of you will get $20,000. So now you have $40,000. What do you do with $40,000? Well, you can buy property with it. Some banks let you buy property with only 5% deposit. Other banks will need 8%, but there are some who only need 5% deposit. So with $40,000, you can buy maybe a property that's $800,000. So what happens if the property that you want to buy is worth only $600,000? Well, your competitor also has $40,000 up their sleeve. So what they do is they bid up the property from $600,000 all the way to $800,000. Because when you have two people wanting the same property and each of those people have enough deposit to buy a property that's $800,000, well, chances are they will bid against each other and the property goes up to $800,000. In addition to super, a lot of people have been able to defer their mortgage repayments, car loan repayments, personal loan repayments, even credit card repayments. And what do a lot of Australians think about deferring their loan repayments? Well, when they log in into their bank account, they see a lot of money in the bank account. They don't see the future repayments that they need to make. It's invisible, so they don't think about it. So what they do is they think that they are suddenly very rich and they want to spend the money that they can see inside their bank account. So instead of buying a property that's $800,000, maybe they buy something that's $1 million because they have a bit more money by deferring their personal loan repayments. In practice, they need to resume their loan repayments first for at least maybe 3 months or 6 months, because if they do it while they are still deferring their other loan repayments, the bank's not going to approve their home loan application. Not only do people have more money from the superannuation and the mortgage and loan deferrals, they also have more money from JobSeeker and JobKeeper. Some people actually earn more with JobKeeper compared to what they were earning before, because with JobKeeper, you used to get a flat rate of $1,500 every fortnight. Now it's a little bit less, but it's still pretty big, so people become wealthier. Alright, so that was reason number 1, too much money lying around. The second reason is that now the banks have very low interest rates. What happens with low interest rates? It will reduce your mortgage repayment that you need to make every month. So when people want to buy something, maybe buy a car, buy a home, buy something else, they look at how much they need to pay. So now because the mortgage repayment is lower, people think, oh, it's very cheap to buy this property. On top of the mental effect, the actual borrowing power of the customer actually goes up as well. So instead of being restricted to a home loan approval that's capped at $600,000, the bank will give them $800,000. So because the home loan is approved for $800,000, then the customer wants to spend $800,000. Because people say that property always goes up, so the more you spend, the more you make. And because there are two different households wanting the same property, that's originally only $600,000, they will outbid one another and they will end up buying that property for $800,000. The third reason is the scarcity of land. So today we live on a planet called Earth, and there's limited space on Earth. Actually, that's not quite true because there is still a lot of space on the deserts. But people don't like living in a hot environment, so they want to stay near the sea. But anyway, because land is scarce, you have 2 households, 3 households, 4 households, 1,000 households that want to buy the same block of land. So they bid up the property price again from $600,000 to $800,000 because those 1,000 people want to buy the same block of land. That's near the sea, near the shopping center, near the fine dining restaurants, near the cafe, near their children's schools. And as of the time that I make this video, I don't see any schools on the deserts. So that's why deserts are not popular as a place to buy homes. Now the fourth and final reason I'm giving you today in terms of why property prices always go up is the fear of missing out. So people say that property is set to go up again in 2021. So a lot of people, they don't know what's happening and what's going to happen next year. So rather than taking a risk of missing out, they just lock themselves into the market now. This is not always a bad strategy. It can also be a good strategy because I honestly believe, by the way, this is not financial advice, so don't blame me if you end up losing money. But I believe it's better to do something compared to doing nothing. So as long as you are realistic with how much property you buy, if you buy one property today, it's probably still going to create more wealth for you over the long term compared to if you buy 0 property at all in your life. So in case property price does go up next year, you may actually want to buy the property today and pay a bit more today compared to a lot more next year. And then the cycle will repeat. Other people will follow you. They will be afraid of the price jumping ahead next year. They will buy this year and pay a bit more so that they don't have to pay a lot more next year. It's like if you buy insurance policy, you pay a bit more for the insurance policy, but you buy a bit of a peace of mind. Because if something happens, you can claim the insurance. And you avoid incurring a large loss. Fun fact, how much will $40,000 be worth if you invested and earn 10% rate of return per annum? It will be $4.7 million in 50 years. So you've got 2 choices. One is you invest $40,000, maybe from your superannuation account, either inside your superannuation account or outside because you have already taken it out. And if you achieve a rate of return of 10%, you will have $4.7 million in 50 years when you retire. Retire like a king. An alternative to doing that is to buy yourself a home. Assuming your home grows in value at around 2% higher per annum compared to the interest rate on your home loan, your rate of return on your deposit is going to be around 10% per annum if you buy that home with 20% deposit. So not only do you get to live in the home pretty much for free, you will have $4.7 million in 50 years and retire like a king. Which one would you do? Let me know in the comments below. Here at Mango Monkey Lends Money, I'll show you that you do not need to be successful to be wealthy. It's quite possible to have only $40,000 and retire like a king. You can even work for McDonald's.
And you can still retire like a king.
Please do subscribe to my channel if you want to learn more about how I fuel wealth and money and retire like a king.